A very good morning to everyone who has logged on to this month's webinar. This month, we are looking at SMEs. This month, Kenya Bankers Association wants us to focus on SMEs, which is a very passionate, an area that the government is very passionate on. And today we have members of SMEs who are beneficiaries of the credit guarantee scheme from the government. We also have key stakeholders from member banks who are participating in this guarantee scheme. And we do have also Kenya Association of Manufacturers represented on the call today. So a warm welcome, and we expect that it is going to be a fruitful meeting where we will learn a lot more of how we have progressed on this government guarantee scheme initiative, which is really aimed to support the SMEs access finance from banks more easily, and we'll also be able to understand how we can be able to access to benefit from the African continent scheme as well. My name is Connie Macharia. I work for Diamond Trust Bank, and Diamond Trust Bank is a regional bank with a huge focus in the SME space. We are one of the largest participants in the guarantee scheme. We have benefited a lot by extending credit to our customers on the back of the government guarantee scheme. We are privileged this morning to be having Mr. Ronald Inyang'ala with us. This gentleman has been in the core of creating the credit guarantee scheme from the drafting space, and he's been following up this implementation with the participating banks and with the SMEs since inception. So he's really the guru from National Treasury that is driving this, and has been really, really supportive, and he's passionate to see it succeed. Mr. Inyang'ala, as you would imagine, is a specialist in economic development, and he has more than 20 years in this space. He advises the Treasury on financials, how to deepen the participation in the financial space, and he's focused on enhancing the effectiveness with which the SME people are getting finance and making that much easier. Since we started the year, Mr. Inyang'ala has worked with the participating banks and also been really, really involved in making sure that the scheme is running well. He has a master's in international development, a lot of certificates from international players in development finance. He's currently doing his PhD in development studies focused in agriculture. So welcome, Mr. Inyang'ala. We also have today with us Joyce Njogu. Joyce joins us from Kenya Association of Manufacturers. Joyce is a certified business coach. So for the SMEs on board, this is somebody who can walk with you. She's a professional mediator. She's also the president of the Female Future Kenya, which is part of AfCTA. And her focus is supporting businesses and developing the businesses, and also developing partnerships that can help the SMEs get funding and access it in an affordable way. So the two will be helping us demystify how we can access funding easily, how the partnerships can help us. And of course, they are keen to hear feedback from the SME beneficiaries and also from the partner banks in terms of how we can improve this landscape to ensure that our SMEs are really benefiting from initiatives that are out there. So without further ado, I want to welcome Mr. Inyang'ala to take it from here and tell us what there is from the National Treasury. Welcome, sir.
Thank you, Joyce. Oh, thank you, Connie from Diamond Trust Bank. I also recognize Joyce Njogu from Kenya Association of Manufacturers, who will also be presenting. I also take note of the Kenya Bank Association representatives, Roslyn Gino. And I can see we are 75 participants on this call. I greet you all this morning as we want to go through this discussion of boosting MSME competitive edge. And my focus will be the Kenya Credit Guarantee Scheme. As you can see on the screen, our vision is to be a world-class credit guarantor for the growth of MSMEs. This vision has been considered by the top management of the steering, the guarantee scheme, and adopted. So this is really the vision. We want to be a world-class credit guarantor for the growth of MSMEs. So at the core of this is the MSMEs, if you can see. I would like to make a disclaimer that in case of any inconsistency with the CGS legal framework, the CGS legal framework shall prevail as much as this presentation we are making from the same. We can proceed to the next slide. I will look at about 8 things. I'll do an introduction, look at the objective, then do a case for CGS in Kenya. Then we will also look at the MSME space. What is the reason for inadequate credit? Then how is this a solution? Then the current product, how does it look like? In this, I will talk about how you can access, what you can do. Then, of course, I will also share with you what the legal framework for the CGS looks like so that you are also updated. Then tell you how far we are, the status of implementation. Have we done something as far as this is concerned? So let's go and let's look at the introduction. The Kenya Credit Guarantee Scheme for MSMEs is one of the government incentives to mobilize private sector capital toward development. Other such initiatives is Kenya Mortgage Refinance Company. Those of you who are keen on your TVs, you are seeing this being run, they're running an advert every day. It all began at Treasury and then it has grown. So this is one of the ways to assist our people to be able to get affordable housing. We also have various infrastructure projects under the public-private partnership arrangement. But this presentation today will focus on the case of the Kenya Credit Guarantee Scheme as the way to access credit by our MSMEs. And this is really the discussion this morning. What is the objective of the CGS? It is to improve and stimulate national economy by encouraging additional lending to MSMEs, increasing investment opportunities for MSMEs, and strengthening skills, capacities, and for all the proprietors. That's the national economy. We're also looking at financing of MSMEs to facilitate the financing of MSMEs so that you can have increased investment opportunity by partially guaranteeing the credit advance to them. And mark the words partially guarantee what is advanced to MSMEs. For the business environment, which is also the core of our government, is to create a conducive business environment and promote partnerships between the government and financial intermediaries with respect to the credit guarantees for MSMEs and other related activities. So these are the objectives in a nutshell. What is the case for CGS? Why are we doing what we are doing? The case for CGS is drawn from the importance of MSMEs. From the Kenya National Bureau of Statistics data 2016, MSMEs employ 14.9 million persons. They account for 34% of our GDP, our gross domestic growth. Of every new job created, 91 of those jobs come from MSMEs, so they are quite important. They face challenges. Most of the MSMEs they close before their 4th birthday. There are problems include shortage of operating funds as the leading reason. The other challenge is lack of collateral as a common challenge for formal and informal MSMEs. So they are considered to be very risky, and therefore they receive inadequate credit. Lending institutions lend MSMEs under unfavorable terms, which we are just going to see in the next slide. That if they get some credit, they get them at a very unfavorable rates. You can see the conditions for credit by banks: high level of collateralization of up to 240 of credit applied. They have insufficient collateral. MSMEs are perceived to pose high risk, and then this increases their chance of being denied credit. Shortage of shorter repayment periods, high interest rates, and inadequate credit. These really are the problems of our MSMEs, whom we are saying are the most important people in our economy. Let's proceed to the next slide. When this study was done also, we found out the reasons why MSMEs get inadequate credit, and we assessed, KNBS assessed the micro, the small, and the medium. The micro, all of them indicated there are three main problems. Lack of collateral as one of the problems, high interest rates, and lending ceilings as the problem. Lending ceiling is the maximum they can get from a bank in a given period of time. These were the three main reasons why they get inadequate credit. This discussion is further advanced under the reasons. Even when you look at the reasons from the banking side, you can proceed, Roslyn. Reasons of inadequate credit is still also from the financial intermediaries, is from the commercial banks, microfinance, public finance, even circles. The same reasons are prevailing when you look at the collateral, there is high interest rate and lending ceiling as the main challenge for our MSMEs in receiving credit from our banks, our financial intermediaries at all levels. Roslyn. So how does the CGS provide a solution? The CGS is a solution in the sense that the conditions for MSMEs receiving credit is the core. And what the guarantee scheme does, it provides a comfort to the financial intermediary that in case of a default, then the scheme will come in part. As a result of that, the financial intermediary will have the incentive to relax some or all conditions. So these conditions include collateral, repayment periods, and interest rates, and of course grace period. Then MSMEs will be able to qualify for more credit in terms of the credit. We can proceed, Roslyn. Why did we set up this? I have already alluded to this. This is part of our government policy. This has been a policy initiative from 2012. It's also part of the Vision 2030. And then the economic gains are that targeted credit support for MSME is likely to lead to growth in output and employment. You saw earlier on that we said 91% of every new job created every year comes from this sector. And then address the market failures. Market failures is where credit is less for this sector, and yet is playing a bigger component in our economy. So we want to unlock surplus liquidity available in the banking system. If you look at our banking sector, it is well liquid, but our MSMEs are not able to get. Ensure MSMEs, women, and youth-owned businesses are able to access financing. And of course, marginalized groups also are able to get a credit, including the agriculture sector, which is the core to our economy in terms of our growth. So those are the three things: government policy, economic gains, and then addressing market failure. What is the value for this? For government, it is improved contribution to the Vision 2030, then leverage on private sector resources, including skills. For the PFIs, we have additional income from the guaranteed loans and dividends. and then recognition of the guarantee in provisioning of loans as per the Prudential guidelines. For MSMEs, we will have improved quality access to credit, and then we will incentivize registration of businesses, and then therefore incentivize growth. And then capacity building is also another value proposition for this citrus link. How does the current product look like? Our current product is for all our MSMEs in all the sectors, but the MSMEs have to be registered. We are sharing risk on the market on a 50-50 pari passu. Forget the complicated word pari passu, just know that we are sharing risk on 50 basis, but the government exposure is up to 25%. The maximum loan amount for the product on the market is 5 million Kenya shillings. So you cannot get more than 5 million. Interests are market rate with discount by the lender. And we are tracking this on a on a basis. Then prepayment penalties are not allowed. Prepayment penalties are not allowed from the banks, grace period of up to 5 months. And then facilities issued, so they're already being issued because we have already entered into an agreement with 7 banks. We are very gracious as the government. There are no guarantee fees for this one, but globally guarantees are charged at a fee, and the sustainable model that will be established will have a fee. This was a COVID response. That's why there's no guarantee fee. The collateral is standard as per the PFI policy, but subject to negotiation by the borrower. All facilities given to MSMEs are to be registered to us through the Central Bank of Kenya. So that is the product we are delivering on the market. How do you access this product? That's the next question I'm sure you are having as an MSME. You can access the product in the following manner. If you qualify, you will approach the PFI. And for now, the 7, we are looking at a possibility of having more on board. Your business proposal will be evaluated based on the approved policies of the banks. Then the PFI will give you a credit and register to us as the government, and then the bank will continue the normal recovery mechanism. The CGS is not taking over your responsibility. It's only giving an assurance. It's kind of a guarantee that in case there is a problem, and of course probably there's a natural problem, then the government of Kenya has undertaken to pay part of that default risk. So that is really how it looks like, the process. You walk to your bank in the normal way, you access the product in the normal way, and then that happens. Let me go to the administration of the scheme. This scheme is being administered by the PS National Treasury. The PS has, we have the steering committee, which is the PS chairs. We have the PS State Department of Industry, or his alternate, where the MSMEs are housed. We have the Attorney General, we have the Governor, Central Bank of Kenya. And the governor is very passionate about this. He attends all the meetings. We have 3 independent members on the committee. PS is the administrator. And then this scheme is managed by a management staff with a scheme manager. Currently, we are operating on an interim basis, and that's what we are currently doing. So this is the management and the administration. The legal framework, number 7, is the next discussion I want to make. Prior to 2020, the PFM Act did not allow us to give guarantees to MSMEs. So I and a team of officers worked on the legal framework. We took the law to Parliament, and Parliament assented to our law. So the CS has the powers to issue guarantees to MSMEs. Then he will prescribe the purpose for the guarantee, provide eligibility criteria, establish a scheme, issue regulations, which he has issued, appoint the independent members, which he has done, then appoint a scheme manager and staff, which he already has done. What reports do we submit? We submit reports to Parliament at least once every year on the credits that have been issued, total guarantees, risk assessment, disaggregation of the enterprise owned by women, youth, and persons with disability, disaggregation into small, medium enterprise, by region and counties, and the members of parliament were very keen about this. So who is eligible? I'm sure that's the question you are asking. The eligible business is registered business or company. You should be a registered taxpayer and compliant. You should be registered with your county. And then, of course, you should be credit worthy. Those are the eligibility criteria for MSMEs. If you go to the bank, they check that you'll be able to access this product based on that eligibility criteria. So we can proceed. The eligible banks, all licensed, no, I think we are on the eligible banks. We should do the eligible banks. The eligible banks are licensed banks by CBK. They should have experience in lending to MSMEs, commit to leverage at least 4 times the guarantee funds, have a wide geographical coverage, maintain a high portfolio. For a bank to participate, that's what they need. How is the guarantee managed? They should commit to appraise the applications, ensure diversification by portfolio, by geographical size, economic sectors, marginalized, and continue to recover in the normal way. Monthly performance reports, all credit issues under the guarantees must be reported. Information of the beneficiaries and enterprise, terms of the facilities, guaranteed facilities that could be in default, and then expected facilities for up to 3 months. So that is where we are. On the next one is how are we implementing? Implementation is ongoing. Initial steps have been done. We conducted a feasibility study. We did an amendment to the PFM Act 2020 on 3rd. The president ascended. We developed regulations, and the scheme was established on October 13th last year. Invited all the 39 banks, and we went through an objective scoring model. 14 banks applied and 7 were successful. The banks are ABSA, Credit Bank, Cooperative Bank, Diamond Trust Bank, whom the moderator comes from, KCB, NCB, and Stanbic. We intend to also have other banks come on board, and I'll be talking about that. This was launched on 8th of December by signing of an agreement. The scheme, we have a scheme steering committee. We have conducted a midterm review on 18th of August 2021, and then we did a training to the 7 banks very recently. So that's really where we are on implementation. I think the next one, I will give you a few of the numbers. These are the numbers. In terms of numbers, where are we? Highlights of the up from December up to October 2021, where are we? We have 742 loans processed, amounting to 1.44 billion shillings to our MSMEs. Already, beneficiaries from 43 counties have been able to benefit. That's 91% of the country. MSMEs from 11 sectors have accessed so far. And then we are also tracking the women, youth, and people with disability. 21% of credit owned by women, youth, and persons with disability have been given up to date. That is 31st of October. That is the numbers in terms of the quick highlights of the performance. We can proceed. Key performance indicators for the period: loan size range from 75,000 shillings. This is very exciting to us. This means that this is the very bottom person. The maximum loan that has been given is 5 million. The average loan size for this period is 2 million. If you take all the loans, the average is 2 million. We are also tracking interest rates. We have interest rates of between 9 and 17%, averaging at 12.8. The loans range from 1 to 36 months averagely. The average is 24.9 months. We are tracking the access in terms of the period of access. And then both micro, small, and medium are accessing. Micro are doing 16%. This month, the small went to 52%, and then 32% are medium. This is the key performance indicators as of October 31st. We go to the trend in terms of this. This is how we have grown. We started in December very slowly. In the month of April, we had a peak. Then we went down and then we picked again, and we are on a trajectory of growth. We are growing every month, in terms of the loan amount that has been given, and also the number of beneficiaries. So we go to the next slide, Roslyn. The sectors, we're also tracking sectors. Trade is doing the highest. We are hoping that the banks will also bring on board other sectors. Trade is doing 64.44%. These are the traders being able to access. Building and construction 8.17, transport and communication 6, personal household. These loans should not be used for consumption. This personal household may be meaning a business that is involved in something that is not under maybe those companies that are there. Then manufacturing is 5.5, tourism is 3, energy is 2.4, agriculture is doing very badly, it's about 1.07, and we are tracking that very carefully. This is the performance by the sectors. I think we go to the next one is the counties. You can see that we have for 3 counties. Nairobi is leading, followed by Mombasa, Kiambu, Kisumu, Nakuru, Bungoma, Busia, Kilifi. This is how the counties are performing. It's also reflective of the distribution of our MSMEs, but we are also asking and encouraging MSMEs from across board to come on board, and also the banks to diversify. We can proceed with the. So we are happy to report that 77 facilities have been fully repaid for the guarantee facility. This means that this guarantee is now available to the next borrowers. Fully repaid facilities amount to 139 million. Total repaid amount is 251 million, includes repayment on current active loans. So we are happy that our MSMEs are borrowing. What we want to encourage is that our MSMEs should borrow and repay. Enhancing the performance of the guarantee credit scheme. These are the next steps. We intend to do targeted awareness campaigns. We want to onboard additional banks. We have already begun the process. We are mobilizing funds to onboard more. We shall evaluate and execute guarantee agreements. We are reviewing the current legal framework to provide maybe more suitable framework, designing sustainable model, mobilizing capital from GOK and development partners. And I want to confirm that development partners are very interested in this guarantee scheme. All of them, World Bank, IFAD. In fact, IFAD are proposing a product for the rural Kenya in terms of the agriculture sector. So all this is happening in this process. We are also working on operationalizing and having it sustainably in terms of the scheme being an independent body separate from Treasury. So this is the next steps. We can proceed, Roslyn. This is the way I normally conclude my discussion in terms of this scheme. We are very passionate for us. And the story here is the starfish boy found at the beach trying to save starfish. And an old man asked him, will you manage to pick all of them? The young man said, in fact, the young man bent and picked the next one and threw it in the sea. And he told the man that I have just saved that next one. We believe that every MSME at a time, our focus as a government is to reach all the MSMEs. I want to conclude by saying that we are not indicating that there is free money in the banks. What we have provided is a guarantee for our MSMEs to access credit from the banks. I think that brings me to the end of my discussion. I want to thank you and probably allow you to ask me questions if there be any. Thank you very much for your attention.
Thank you very much, Mr. Inyang'ala. That was really indeed very insightful. And as I said earlier, Diamond Trust Bank is one of the 7 banks that has enjoyed this facility, and our customers are quite happy because of this partnership. There is a question asking how long will this guarantee scheme last? And I'd also invite members to post their questions in the chat.
Can I take that one?
Yes, Mr. Inyang'ala, how long will this last?
The current contracts with the 7 banks expires on the 7th of December this year. However, from where we sit as government, and after the midterm review and discussion with the 7 banks, we have considered and allowed that the banks can request for an extension. We have so far received a request from about 5 of the banks. Once we receive that, we will process an extension of agreement for the current product in the way it is. But I want to clearly say that the guarantee decision for the government is a long-term agenda. What will come to an end probably will be this current arrangement and then transit to a sustainable model. So there will be changes in the product design, including the possibility of a guarantee fee and all those. But this is a decision of government that we shall be in this space. These guarantees have worked in countries like South Korea, Malaysia, and we are benchmarking our guarantee scheme on those kind of economies. Even Pakistan is doing one very good guarantee. So this is the way we are going in terms of supporting our MSMEs. So it's a long-term government agenda. But the contracts for this, the one we are implementing, comes to an end on 7th. If the bank does not apply for extension, the contract will stand expired. I hope that question is properly addressed.
Thank you very much, sir. There's a question from Frederick Juma. He wants to know who is registered MSME. Are we talking about small limited companies? Could you define for us MSME as envisaged by this guarantee scheme?
MSMEs can be either a micro, a small, or a medium. Those are the 3 categories of MSMEs. How do we differentiate the 3 categories? We differentiate by the turnover, the number of employees, and asset base. For the micro, the number of employees should not be more than 9. The turnover should not be more than 500. And then the small is 500 to 5 million. And then the employees are 10 to 50. And then, of course, the medium is the employees should be 50 to 250. And then the turnover should be 5 million to 100 million. That is the broad definition of the micro, small, and medium enterprises. Registration is another story altogether. We have the BRS, the Business Registration Services, that registers business names. They register you as a sole proprietor, as a limited company, or as a partnership. The registration being envisioned in this is registration under those categories by BRS. That is the registration that you require for you to access this product.
So thank you. There's a question, there's a comment that there isn't a single Islamic bank among the 7 banks. Is there any reason for that?
Okay. That's a good question, and we appreciate that concern. We like to state as follows. At the initial stages, we invited all the 39 banks. So only 14 banks applied. They were evaluated using a stock scoring model. And then we are able to reach on the 7 banks. We will still also make a call to we would also make another call to the market to get other banks. I also want to further clarify that at the product level, the guarantee scheme, we are not discriminating against those people, the people who are under an Islamic product, in the sense that the banks that are administering the product in terms of their own products, including KCB, which has a number of products that are compliant to all the faiths. So from that perspective, that is the thinking. But we shall also be inviting banks, and we shall evaluate them using a criteria that is set out in the law, and then we'll come out with the banks. So that would be the whole and long answer for that.
Thank you. There is a question around interest rates. How is this determined? Is it different from other loans? And as we address that, is to say, does this apply to mortgages by SMEs?
The interest rate question has been a debate question in this country for a long time. We had the interest rate capping that brought about a number of discussions. So the current product, we have not capped the interest rate, but we are monitoring. What the banks have done is to tell us their value proposition to our borrowers. So what we track every month is whether the banks are keeping to their commitment in terms of the interest rate that they're giving out. The interest rates are a matrix of the risk of the borrower. So what the guarantee scheme, it takes part of that risk, and that risk should be factored in the product that goes to the final beneficiaries. It is the interest of government that the interest rates are actually discounted based on the risk assessment of the borrower and the risk that has been taken by the guarantee scheme.
All right, thank you. I hear you have directed that back to the banks in terms of determining the interest rates. There's a question around, are startups allowed, and is there any age limit for a company?
We have not defined the age limit of a company that is registered that can access this. I think it is allowed. So the startup here, we have not expressly disallowed that in our undertaking with the banks. What the banks will do, they will evaluate the startup based on their processes and procedures. The challenge sometimes startup is the fact that they are not. It is especially if it's a new idea, the banks have more fears that the guarantee scheme may not manage to take away. But the point is, we have not locked the startups out from the product they can access. I hope that is the correct position.
Okay. I see there is a question. There's Mr. Kahiru asking, do I ask for the facility or does the bank invite me? I'm an account holder with one of the banks and I am not aware of this.
We are trying to, there are two things. The product is being implemented at two levels. One, from our level, we have given a comfort to the banks. So what you will do as a borrower, you'll approach your bank in the normal way. You'll be evaluated based on the policies and the eligibility criteria that we have given to the bank. Now, the bank would look at, see if you have insufficient collateral, then you qualify to be under this product. So that decision will be made by the credit officers at the bank level. They will look at your eligibility criteria, and then the decision will be made. Then they will book you under the scheme. What also may be happening is that because of what we call moral hazard, moral hazard is where borrowers borrow money and refuse to pay because the government is part of this scheme. The banks may be careful in telling you that you have borrowed under the scheme because they don't want you to assume that the government has taken your liability. But you go to your bank, apply for the loan, and the bank will evaluate in that context and be able to provide you the money.
All right, thank you. Paul appreciates the presentation, but has a concern around the amount of loans that have gone to the agricultural sector. And therefore, he's asking, what are the strategies that we are putting in place to boost this, given the importance of agriculture to our economy?
Thank you. Thank you so much for appreciating the presentation and what we are doing at the national government. We have also taken concern that agriculture is not doing very well in regard to the sector absorption of the guarantee. But there are a number of issues around this question of the sectors, which we are also addressing from the back end. The way our traditional definition of agriculture has been defined will be limiting in terms of what we are reporting as numbers. Because from where we sit, agriculture has what we call the value chain. The value chain here is the agro businesses there, the agro vents, the agro processing. People are doing something in agriculture. So that's one thing that needs to be addressed from the reporting framework, so that they are not all reported as trade, but also disaggregated. So that we are addressing from a reporting perspective. The second thing we are doing, noting the importance of agriculture, I told you earlier that we are negotiating with the development partners. And IFAD, which is quite focused on agriculture, is proposing that we can have a special window for smallholder farmers and agriculture. And we are still negotiating to see that that can be brought on board. So those are the two things I would say in terms of where we are and what we are doing about agriculture.
Are these funds available for
mortgages? The focus of the guarantee product is for enterprise development and business. So for avoidance of doubt, in fact, the law is clear. It is for working capital. It is for maybe buying business assets. So the focus of this product is for business growth. If you are doing an agro-processing farm, you are doing manufacturing, that is the focus. It's not for consumption. So I guess, but I will need to consult my legal department to see how that comes in. I guess mortgage will be a problem to this but the people involved in the value chain for construction, those who are doing welding, those who are doing doors, the windows, those are supposed to access this product, the hardwares. So what is kept out is, number one, the real estates. We don't want to have real estate companies coming to borrow to go and do that's not a part of this product. But the value chain of construction is allowed. I think that I wanted to clarify that it's a more broader engagement so that we are clear. The artisans in the construction industry should be encouraged to come for this. All the people doing small constructions should be encouraged. So I think that is the whole end for this product.
Thank you. There's a question: how do businesses, especially limited companies, register at the counties in order to benefit from the scheme?
The BRS portal is available on the eCitizen platform, where you can register your business. The other one of the county, you'll obtain a county license from your county headquarters, trade office. Those are just the two things you need. You need to just go to the eCitizen platform, you do BRS, you click in. Actually, there is a story of a borrower who went to a bank and the borrower did not even have registration. He's an old man. This borrower walked to a bank and he wanted 50,000 shillings. But they looked at the character, what the banks do best. This borrower looked like he can do a better thing. So he was asked to register a business in the next cyber, walked back and got some money, and the business is doing very well. The borrower does not even know that the product is helping him. But it's a story that is very exciting to us as the scheme. So register your business and walk to the bank, and I think that is you will be eligible. As long as you have commitment to get money and pay back.
So thank you very, very much. There is a question from a gentleman that if he's not among the 7 banks who are registered, can he still get the loan from the other banks?
For now,
he's a customer. Okay.
Okay. For now, you'll have to access this product from the 7 banks that have signed an agreement with the government. The comfort is that we are doing another round of admission of other banks. Of course, when you are starting a product, you start small, and then you grow as you continue to grow. So we would work on admitting additional banks, and maybe your bank will be part of that. But for now, it is the 7 banks that you can benefit from this product from.
Thank you. There's Joseph Naikuni wanted a briefing on how a bank that is not currently participating in the scheme can apply and be part of this procedure. Is that something you would answer now? You would send through some criteria?
Yes, I will answer now. What we will do, we have begun a process at National Treasury of inviting additional participating banks. The invitation will come to all the banks on the market that are regulated by CBK. When that happens, the banks will be free to apply. We will send that invitation even to KBA, just the way we did the other time. And the banks will then be able to be evaluated in light of the value proposition they will be given.
All right, so if I'm a sole proprietor, can I still qualify? I'm registered MSME. And also, if I have an existing loan at the moment, can I still borrow under the scheme?
I lost you a bit. I think you are not, you broke in the middle, so I didn't get the question.
Oh, sorry. Can you hear me now? I'm saying if somebody is a sole proprietor, can they qualify? And if they are currently servicing a loan in another, they have another loan at the moment, can they still borrow under the scheme?
I don't know whether I got you. I got bits of what you were trying to say, but you broke in the middle. But let me just try to attempt to get what you said. You are talking about an individual who has a business. This person has an existing facility with a bank. Then he wants to restructure. Is that the one you are talking about? Is that the question?
Yeah, if somebody is already servicing another loan, can they still borrow under the scheme?
If someone is already servicing a loan, as long as what you are borrowing is not, number one, the bank will do the evaluation. What this scheme cannot do is to take over the other loan. Well, this guarantee product was brought on board during the COVID time, and one of the problems would have been that banks will have offloaded their bad loans to this scheme. So in the contract, it's clear that you cannot do a top-up based on this contract. So, but if your loan ability can be able to access additional money from the 7 banks, and they assess you and they give you a loan and you're able to repay back, then that is okay. So the assessment will majorly go back to the bank. They will do an assessment. They have guidance on how to deal with the such borrowers. So it will be handled at the bank level.
So thank you very much, Mr. Inyang'ala. We will have to stop there because of time, but I want to thank you for your insightful discussions, and request members to continue posting their questions, which we will find a way to respond to along the way. At this point, I would like us to invite Ms. Joyce Njogu from Kenya Association of Manufacturers, so that she can also take us through, so we can understand, apart from just government guarantee here, how can we be facilitated and supported to be able to benefit from the African continent scheme as well. Welcome.
Thank you very much, Connie, for facilitating the session. I also want to acknowledge Mr. Ronald Inyang'ala for such a wonderful presentation, well articulated, and the details provided as necessary. I also want to thank KBA, Rosling, for organizing this webinar where we can all learn and share and eventually make a difference in our businesses and our lives and the economy at large. I am Joyce Njogu, as it has been mentioned, and I'll be speaking on how to leverage on the African Continental Free Trade Area to reap gains as an SME. And we've already just gone through opportunities to access finance, which is part of growth indicators for you to be able to access this region. This African Continental Free Trade Area is an opportunity for a market that is within a free trade area. I'll be able through this session to take you through first what the AfCTA is all about, and then the opportunities and the challenges and how to make the best of it. Kenya Association of Manufacturers is a business membership organization, and it covers not just Kenya, but also support within the region, East Africa, where we have an East African Manufacturers Network, and we support as a lead BMO, we support those other BMOs, that is Uganda Manufacturers Association, the Tanzania one, Rwanda, Burundi, and most recently we're also supporting Ethiopia. Our core mandate, of course, is fact-based policy advocacy. I hope you can see me. I'm using my phone, so if you can see me, Connie, you can tell me if it's okay. And we operate in about 7 regions in the country using the regional economic blocks that were there previously: Nairobi, Coast Area, Nyanza and Western, Nakuru, Central Province, through Thika, Mombasa, covering Coast Area. And also we have about 14 sectors and over 40 subsectors. And these sectors, the biggest one being food and beverage. We've heard a lot about the agricultural sector and the opportunities there are, and gaps also for growth. Within that, I've heard about building and construction being a big sector that is accessing funds. So that's another sector within our association. And all of them are broken down into different subsectors. And there are those, for instance, in food, we have those in meat, those in dairy, those in edible oil. So there are quite a number. Some people may not know those are also in manufacturing, the beverages and such. We have more than 1,000 members at CAM, active members, and were established in 1959. We are 62 years this year. Our mission is to promote competitive and sustainable local manufacturing. So looking at how our members can be competitive in everything that we do, and also sustainable in their plans, their investments, and also the policies that support them in this country and globally. We also seek to be a world-class business membership organization, and we partner with various organizations, not just regionally, but also globally, so that we can be able to offer the best services to our members. So we have partnerships with the Danish industries, with the American industries, also with the Italian ones, and just regionally at Commerce Business Council, just to be able to, share ideas and connect our members at the same time, make sure we're accessing the best services. I just want to go a little into what African Continental Free Trade Area is. It's a flagship of the African Union, which is where there's the Agenda 2063. And it is it was set up in order to boost intra-African trade by providing a comprehensive and mutually beneficial free trade agreement among member states. And this agreement came into force on 30th May 2020, and the preferential trading was commenced or launched on 1st January 2021 and those who are ratified members or the partner states that were referred can now trade. The free trade means that countries can import and export goods without any tariff or non-tariff barriers. And also people can move within these countries. And of course, there's a lot of lobbying to ensure that the movement also does not require passports and such things. So besides goods, also movement of people where they can be able to trade freely, as well as, participate even in tourism freely and just enjoy the African continent as partners. And of course, this is meant to increase our prosperity, not just in Kenya, but for all participating nations, by allowing us to consume and buy more from different parts of Africa, and also, get better quality products, because the competition, of course, will be higher, and the population being high, people can access things at a lower cost. This, of course, is meant to drive a lot of economic growth for all the participating countries, and also boost our capacity to trade better, our skills, mobility, so that people can work anywhere they wish and share their talent across. There are 54 African countries that have signed the agreement. 34 member states have ratified and deposited the instruments with the African Union. And only countries that have signed and deposited the instruments can trade under the preferential terms. And the agreement is being implemented in 2 phases, just to be able to manage the transition from different regional economic blocks. We have about eight of them, and transition into one economic block is quite a journey. Some of them are still protectionist in nature. So moving away from that protectionism, in terms of creating tariffs and non-tariff barriers in the region is what is taking long, and that's why it's been divided into 2 phases. Phase 1 is to allow trade in goods, trade in services for those who are offering services. I saw trade is the #1 in accessing the guarantee schemes, which is quite a good area. And trade is quite a big issue for our manufacturers. Those who are in manufacturing, we know after you produce, then you have to trade those goods and work with the people in services. I also saw transport is also enjoying those guarantee schemes. Manufactured goods must be moved from one place to another. So transport, we are highly interlinked in terms of the different sectors. Also rules and procedures on dispute settlement. We know that a lot of people are having challenges and even feeling conned when they trade with other partners without due diligence. So we recognize that dispute settlement is a critical element of trade, as people partner with different countries and they may not necessarily know them very well. So disputes have arisen before and they are likely to increase in this area. The second phase will now look at the policy environment, looking at the competition policy so that there's fair trade, fair competition in terms of how people trade from country to country, and consolidating into one African competition law. So this will take quite some time as different laws within the different regional economic blocks are consolidated or harmonized. Already in Kenya, we are trying to harmonize with East Africa, and then the West Africans will harmonize theirs, and then eventually we harmonize at the African level. Investment policies also will be part of the second phase, protecting investments through favorable policies. Intellectual property rights, we know in Kenya alone we have challenges of property rights being infringed. So this will also go to the African level, because if Kenya alone we have such challenges, you can imagine the scale at the African level could also be huge. E-commerce also will take phase 2, and a lot of pilot programs have gone into enhancing e-commerce, where we also provide payment solutions for SMEs to trade. This will enhance, of course, how efficient we operate and cut costs in terms of movement of people and movement of goods, so that we can trade more efficiently in an African context. Then the implementation of the instruments, in terms of ratification, only 34, as I said earlier, have ratified countries. Customs, documentation and procedures, work is still ongoing, especially on the infrastructure on how customs will be recognized. so that you're not frustrated at border points or at the airports where your goods have to move, or even just issues of movement of different things. So this is an area where the infrastructure is being strengthened and where it's lacking a connection being linked, just to make it as efficient as possible. Those who have studied the European Union and how they work, you would understand better if you studied it, because it's been operational for quite some time, is what we want to achieve as Africa. Then rules of origin, there's still a lot of negotiations of what will be acknowledged as the original from Africa. Sometimes we get things from elsewhere and then we call them origin, maybe we say they originate from Kenya, and really they're originating from another part of the world. So these rules of origin is also being negotiated so that they can be recognized and acknowledged in the process of trading. We have tariff concessions. So there are many tariff offers that have not yet been validated, and tariffs is one of the things that increase cost of doing business. So this is a critical component for us to enjoy cost efficiency in the free trade area that is being offered at African level. And also African Trade Observatory is still at the pilot stage, where a lot of information is still being uploaded so that people can get access to information. And the Pan-African payment system, which I had alluded to earlier. So just looking at the opportunities, the African continental free trade area has over 1.2 billion people currently. That is a huge market that can consume our products. Of course, majority being young people between 18 and 35. Over 50% of Africans are very young. And so as we think through our products and our services, those are the high population group that we could serve as an opportunity. It's set, of course, to increase prosperity of the participating nations, and these consumers are allowed to buy more, better quality products, low cost, and generally increase the innovation around how people access goods or skills and different services. This AfCTA, and it's just a short form of African Continental Free Trade Area, it holds a lot of promise for businesses and other stakeholders who stand to benefit from these trade agreements. And we are told that it will double from the research that has been done. Intra-Africa trade will double by 2035. According to the United Nations Economic Commission, if it is fully implemented, at least we'll move from the 15% current trade, which is about $50 billion from 2017, to a growth of 25% or $70 billion by 2040. So we can see about $20 billion growth trajectory is enhanced, is anticipated. And how do MSMEs participate in these growth areas? And we see there's further studies that have been done on the different products and services that are in demand. And I would encourage you to read and see where you can plug in, either as a new business line or also probably already fall within that business area, and you can see how to participate in this. The intra-African exports are likely to grow by 58%, especially to markets like Ethiopia and Nigeria, where the populations are over 90 million each, also Congo. So those are big markets with high populations that it is perceived the highest growth will come from those regions. For SMEs, this is a lot of opportunities for market diversification, and it requires a lot of capacity building, increasing your capacity and your capabilities to handle these volumes of demand that would come from this level of consumer market. A lot of skills development work will get in, so those who are in skills development, these are huge opportunities to participate and support SMEs to enhance their productivity and their competitiveness, for them to grow in a sustainable way as the whole of Africa looks at growth trajectories and opportunities. Once you see that a market has been identified and it is huge and barriers are being removed, then it means there are a lot of engagement opportunities across different value chains. So of course, the regional value chains will increase. And already a lot of regional value chains are engaged. For instance, we have SMEs who say they get their butter from Ghana or from Congo. There are those who, they're already doing that, but in small volumes. But now what is being promised is to have a structured approach of value chains in an open market, a free trade area, and they can be structured in a formal way, and people can partner even across different associations to be able to exchange networks and begin to access products and services cheaply and in a more secure manner where people have enough due diligence. The other area is on employment creation. So there's a lot of opportunities to create employment by virtue of growing the businesses. And sometimes people wonder, where are these jobs? Of course, if you get a market that's big enough for you to invest probably in machinery and plants and all that, you will need people to support you to drive that. And you can access people from different parts of Africa to support your growth, the way we see transnational companies operating. And that way you also enhance your networks in those regions. Kenyans are highly mobile in terms of moving from different countries to access different types of jobs. So it means like there's a time there were chaos in Tanzania and even South Africa because of Kenyans penetrating those areas. So we are saying that as much as we don't want to export too much or get a hemorrhage, we have a lot of Kenyans who are highly educated and they can participate in different economies within Africa to grow their careers as well as improve the economies of the country. But the reality there is that as we harness these demographic dividends I had mentioned earlier, there are challenges within these opportunities that have been said. Once we start integrating supply chains or those forward and backward linkages or grow our exports through partnerships with the traders, whether they are retail wholesalers, like what we are doing with people like Carrefour, as they open in Uganda, you tell them you want to access their stores in Uganda. And because they have already done a lot of due diligence with you, for instance, in Kenya, accessing those markets is quite cheap in terms of administrative procedure because they've already qualified you in one market. So leveraging on regional retail stores, regional wholesalers, those are opportunities to access some of those markets. And even agents who have a lot of knowledge of distributors in different markets, they can consolidate efforts and have big wholesale or storehouses, bonded warehouses that people can partner and access markets quite cheaply. For MSMEs, it's how you group yourselves, consolidate your volumes, and then access cheaper transport, which is shared, and be able to go to these markets cheaply. Because I know transport can be quite an issue if you're just moving low volumes. So with your low volumes, there's nothing wrong with having low volumes. You partner with many others with their similar volumes, and then you fill in probably one transport system, and you can share costs and that. So that can be done well in groups and supported. As I was saying earlier, as these growth opportunities are highlighted, of course, there are still challenges. From the launch in January, many things have still not happened. For instance, we've still seen that the actual trading is not as actively engaged as we had anticipated. Only those multinationals who already had good working infrastructures are able to penetrate those markets, but they are not yet enjoying the tariff liberalization because negotiations are still ongoing and they have taken longer than expected. Rules of origin have also not been finalized, especially for some sectors. We've seen some custom union members have not moved, they're not moving at the same pace. You find, for instance, people in ECOWAS, SADC, they were not moving at the same pace in our aggression towards harmonizing. And some people still want to maintain multiple membership. They want to remain in COMESA, they want to remain in SADC and benefit uniquely from the opportunities that come from those regional economic communities. And this is taking a slower pace. Some members also have not ratified. We saw only 35 out of 55 have ratified. And then some state parties, they're still questioning the procedures and the rules and maintaining some of the protectionism which they're adamant to release, like things to do with food security. We have many countries still wanting to protect those sectors. Also protection of MSMEs so that the sectors where SMEs are thriving, there's that interest to not destabilize that sector and give it space to grow internally in their countries. So there's some limitation in that area. But just in conclusion, I know a lot of time has been taken earlier, a lot of interest on financing. So some of the challenges I'd mentioned earlier, like the underdeveloped transport systems, logistics systems still underdeveloped in some areas. Some countries have challenges with air flights. Like now, just the other day, Goma got the first air transport through Jumbo Jet, and it goes there only twice a week. So if you land there on a Monday, you're likely to wait till Friday. So that can limit your movement or how you want to operate with your trade. Some areas have no roads or rail systems. Also, I had mentioned about overlapping memberships where people don't want to give up one trading block. Clearance logistics across different countries are still a challenge, and also, or they are not necessarily harmonized. Some customs are unfamiliar, and you're surprised when you're trying to transit your goods from one country to another. You find that there are some rules you had not anticipated. But really, in conclusion, we are saying that at least we should focus on the economic benefits of free trade area, where we can become globally competitive. And since the launch, as the operational instruments are work in progress, we can begin to map out backward and forward linkages within those economies that can support SMEs, whether it's agriculture, even finance, what has been mentioned, and other sectors. The foreign exchange earnings can also be increased over time as we look for one single monetary tool, that is instrument that is still being worked out, where Africa can trade in one currency. Currently, people are losing money when exchanging from one currency to another, and sometimes it affects how we cost our services, and those challenges come in. So at least for now, 90% of the tariff offers need to be finalized and circulated by each party. A list of 7% sensitive products need to be availed by each state. They've been given that window, and at least 3% exclusion. Those are those specific protectionist areas that either are for protecting MSMEs or certain sectors that are core to each economy. Tariff liberalization also, it will be pegged on rules of origin that has had a delay, and they need to be published once they are ready. And also the list of duties and charges need to be gazetted so that MSMEs can also understand this, and it can be in public domain where you can understand each of the products which have no duty to be paid, and you can easily trade without fear of reprimand or being harassed by customs or other forces that would interfere with your trading. Data management is another area. So there's a lot of discussions and information uploading into national systems so that you can be able to understand your business requirements. There's also a need for clear directives concerning tariffs for all goods, so that people understand the different tariffs and their percentages, whether they are totally free, no taxation, or what percentages have been given as preferential. Currently, an implementation committee or composed of public and private sectors have been put in place, and they will be monitoring the effectiveness of these instruments and how transparent they are. So generally, intra-Africa trade will be of high commercial value probably in 2022 as we move forward, as we continue to implement this. So for us, it's to create hope that we have to begin to understand how we participate in this. For MSMEs, some of them say that, I have no interest in going to the export market, but the reality is these products from South Africa, Nigeria, Ghana, Ethiopia will come to Kenya and compete with you at home ground. So you still need to, make your products of high quality or your services of high quality and make them as competitive as possible, especially in terms of price and ease of access, because the others will be here in full force, and we will need to thrive also. As they thrive in our market, we need to thrive first in this market in Kenya, with the high competition that will come with free trade, free movement of goods coming to sell in our Kenyan stores, including kiosks. Some people had said we have even Chinese selling in Gikomba. So that is how deeply penetrated it will be. We'll have different people from different countries selling even in Gikomba, where we feel that is our local space. They will have the freedom to sell there. So if somebody comes from another country and is selling with you in Gikomba or even in the malls or wherever you're selling your product, how competitive are you in all those aspects that we have discussed, quality, price, and generally, offering what Kenyans need or the rest of Africa need? So that's just my call to you. Begin to assess your products, begin to understand who else in Africa is offering what you're offering. And if they came to Kenya, will you compete and also just have an advantage and sell and succeed in your business? Otherwise, we wish you the best also at CAM as we engage to support you to grow. Thank you very much.
Oh, wow, Joyce, thank you so much for that very, very insightful presentation. I think members have just been blown off to see how much opportunity there is to do business across our continent. But there are some questions here around CAM being perceived as an organization for the big boys and girls, and with the MSMEs having no voice. And so they want to know what are the plans that CAM has to be able to make it more inclusive so that the MSMEs feel that they can also access services from CAM, and also that they can be able to reach you.
Thank you. That's a good question. I know there has been a lot of perception that it's a big boys club, and big boys are also good to be associated with. I don't know if people have understood brand association. There are people who want to be associated with who is succeeding, and you learn from them, grow with them, and just be networked. And over time, you become like them. So we are proud of also hosting big boys, from multinationals to the large transnational companies. But again, over 40% of our members are actually SMEs. And most recently, we incorporated the micros, because where really we were lacking was the micros, the startups and such. And we started the Sme Hub, where we can invite even micros at a preferential rate of only about 13,000 annual subscription, which comes to about 1,000 a month. And they are able to engage at the right pace, the right level, and even participate with the big boys. Because a lot of times when we are lobbying in government, they'll always want to know the volumes, how many people are affected, does it have any impact on the economy? And sometimes as an SME alone, you may not influence from that perspective. So we look at the entire economy, how many players are there in each sector, and MSMEs included. The other area we noticed is that some of the policies that come up favor only those who are producing large volumes, and MSMEs suffer, whether it's excise duty or import duties, they suffer because they are dealing with small volumes. So this SME Hub creates a platform for SMEs to also air their voices, and the government has welcomed this kind of engagements where they also need to understand what policies particularly affect MSMEs, so that we don't have blanket policies being issued either by KRA or others, or environment and others, but with a consideration of those who may not necessarily operate at large or in such big spaces, and they're just in a small space. Some micros and startups operate actually from their houses, and we are telling people like KEBS to find standards that can also support those who are operating from their houses before they move to other spaces. Or people like KIE who are offering spaces and sheds. Nowadays, they have very big ones, and micros really are not fitting in, and they have to go to Kirby and others. So just supporting on how we can build incubation centers for MSMEs. We also went a step further and started engaging youth and women in manufacturing so that they can also have a voice. We notice a lot of women in manufacturing are quite informal, and some of them don't even know they're manufacturing. If you're doing juice, crisps, and such things, you're also a manufacturer, and would like you to grow. And those are really high growth areas. And some companies have made a lot of growth through such products. And we invite the women to come in formally and be recognized, because generally within the economy, we say that a lot of women are not in manufacturing, but really they've not come out to be counted. So we are giving them a voice also, and be able to fit in, not just in the micro setups, but also in large industries where they are heavily male dominated. We're encouraging women to also participate, whether as employees or as entrepreneurs themselves, the business owners, and the youth also, who oftentimes leave colleges with a lot of innovations, and the youth dies off when they find they are not finding opportunities to plug in or to commercialize their products. We are looking at how to create linkages, but through the technical colleges and the universities who have their own innovation systems, and we can have a structured approach of linking them to industries to be able to either commercialize or sell their ideas, or generally learn how to move from just being projects into business enterprises. So I hope that responds. So we welcome you to come. It's not only for big boys, we also have the MSMEs, and we welcome you to interact with big boys. They can really help you grow. They can give you markets through supply chain linkages. They can even give you credit, because some of our MSMEs get credit from the large manufacturers for either access to raw materials or just also as distributors to sell their goods. So there are actually very many benefits of being in a large ecosystem. Thank you.
Thank you, Joyce. In terms of your national network, where do people find you? For example, we have somebody in Kakamega and says, how would she be able to find you? Is there an office there? Is there a telephone number? How do we get to come?
Yes, we have an office in Kisumu and also in Eldoret that covers those regions. Kakamega, of course, is nearer Kisumu, and we have an office there with 3 officers. We have an office in Eldoret also with 2 officers. We have an office in Mombasa for those who are in those regions. I'd mentioned we have 7 chapters, which means 7 regional offices, which have employees of CAM based there. And they also have a governance structure led by industries in those regions, the chairman and the members of the committee in those regions. And I put more information there on how you can access us, but there's also info@cam.co.ke, as well as writing to members help desk at cam.co.ke, and we can plug in and support you in the areas that you need help.
All right, thank you. In your presentation, Joyce, you did mention something about rules of origin. There's a question of, can you explain what is rules of origin?
Thank you. Rules of origin are generally rules of indicating where your products are originating from of a certain percentage. For instance, by the time you're making your chair, what percentage of raw materials come from the country that you come from, just to allow for those who are able to import raw materials. If I import raw materials 100% and make them, I can now give my origin mainly based on how I make that product. But those whose also raw materials come, a percentage comes from, let's say, Kenya, and you meet that criteria or threshold, then your product is known as a Kenyan product. So it's just a way of differentiating products that are made in Kenya or made in Uganda or made in Africa. For the sake of AfCTA, it will be about made in Africa, at least a certain percentage. And these are the things now they are negotiating to discuss what percentage. Is it 50%? Is it 80% of the raw materials should come from that country so that it can be considered a locally made product or a Kenyan product? But now if it's your own skills, of course, you as an individual, your origin is Kenya as an individual. But when it comes to making products, then it depends. Hello, any other questions?
So thank you very much, Joyce. I don't see another question on the chat now, but I want to really thank you and appreciate your really informative presentation. And I'm sure that members now in our the SMEs and all the stakeholders have a better view and understanding of what Kenya Association of Manufacturers can do for us so that we can access the partnerships that we need to grow our businesses, and as well as access financing. I think it's very interesting to hear that SMEs can be hooked up with the big boys and get some stuff on credit, which is also a very important thing, so that as you get financing through the banks, there's some credit that can also be given by the bigger boys. Thank you very much. I also want to thank Roslyn and Kenya Bankers Association team for allowing us to get these discussions. And I want to thank Mr. Inyang'ala for also hanging around with us. And I think this will bring us to the end of the session today. Like I mentioned earlier, this is done. Kenya Bankers Association has these forums once a month. So really we are passionate from the banking industry to have conversations on how we can assist the SMEs, realizing that they really are play a very big part in our economy. So thank you very much, everyone. And I want to hand this over to Kenya Bankers Association, Roslyn.
Thank you so much, Connie. With that, I think we're coming to the end of our program today. I want to appreciate everyone for joining us and to appreciate all our speakers for today, including our well-able moderator. I wish you all a very good day. Thank you.
Thank you.